What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started. Okay guys, this feels like a great opportunity. We're talking about a SPAC, FinServ, ticker symbol FSRV. Just in case you're not aware of what a SPAC is short for Special Purpose Acquisition Company. It's basically a company with no commercial operations of its own that is formed strictly to raise capital through an initial public offering for the purpose of acquiring an existing company. So this SPAC is merging with Katapult. Katapult is a leading e-commerce post-lease purchase platform provider. So as you can see, the share price for FinServ shot up after the announcement of the merger. I'm sure most of you know this, but after the merger, this ticker symbol here will change to reflect Katapult's ticker, which will be KPLT. Right, so let's have a look at what Katapult actually does. So I'm just going to read this from their website. They explain it really nicely. Today's shopper is demanding a better way to pay. Do you have the right financing platform? Half the US has FICO score below 700 and financing options are limited. 47% of US customers need financing for a purchase of $400 or more. Non-prime customers are shopping, but without lease-to-own or no credit needed financing options, they simply won't buy. When it comes to purchasing durable goods like furniture or electronics, non-prime customers are often forced to make low-quality purchases or go without. Katapult helps you capture this missing segment and allows them to pay over time through a transparent lease application process that utilizes our proprietary decision-making logic. I've used similar payment solutions personally, and I know the amount of value that this sort of thing has, especially for people that have low credit scores. So the market is huge in this sector, especially during and even after when the dust settles from COVID. People will be struggling financially, and solutions like Katapult will be used by a lot of people, in my opinion. Okay, so now let's have a look at the merger details. Under the terms of the proposed transaction, FinServ will merge with Katapult at a pro forma combined enterprise value of approximately $1 billion and equity value of $962 million, representing an EV/EBITDA multiples of 14.1 and 6.6 projected EBITDA for 2021 and 2022 respectively. Total consideration paid to Katapult's existing shareholders will be $833 million. Cash proceeds of the transaction will fund up to $325 million of cash consideration to Katapult's existing shareholders and $50 million of cash to Katapult's balance sheet. The cash components of the transaction will be funded by FinServ's cash trust of $250 million, assuming no redemptions, as well as $150 million private placement of common stock at $10 per share from various institutional investors, led by Tiger Global Management and Neuberger Berman Funds. Now I want to show you some key highlights that detail the business. Katapult is a leading e-commerce post-lease purchase platform provider focused on estimated $50 billion of annual non-prime consumer durable goods e-commerce spend. It delivers a clear and compelling value proposition to both consumers and merchants, transforming the way non-prime consumers shop for essential goods and enabling merchant access to this underserved segment. Proprietary technology platform purpose-built for e-commerce, combining superior consumer and merchant experiences with powerful risk management capabilities and scalability. Established position in e-commerce ecosystem with significant platform support from top-tier e-commerce retailers, leading e-commerce platforms and lending partners. Now this is the bit I like the most. Attractive, profitable financial profile with approximately $250 million of projected revenue, 172% year over year for 2020. Proven and experienced management team who will continue leading the combined company. So this is a SPAC that's already making some money, okay? It's not an EV SPAC that expects to start mass producing in a few years from now. This company is already doing well. Okay, now I'm going to head over to their investor presentation and show you a few things. They've had some incredible growth and the potential for the future is huge. I mean, Katapult is growing more than 75% and it is 14 times sales, whereas PayPal currently is 35 times sales. And have a look at this. According to them, the market opportunity for durable goods e-commerce currently is around 180 billion, and this is expected to rise to approximately 300 billion in 2023. Currently, the e-commerce durable goods market opportunity targeting an underserved population is between 40 to 50 billion. And despite their incredible growth, they've only captured 1% of this segment, so just imagine how much more they have to go. And I simply love this next slide. According to them, they are the only e-commerce financing platform that's focusing on non-prime consumers. So this just feels like a no-brainer to me. Just take a look at this slide and tell me you don't think this is the right time to buy into this stock. At $13.50, this is a steal. Okay, I also want to talk about the leadership team at Katapult, as it's really important if you're investing in a company that they have good leadership. So it looks like they do have a really good leadership team. Derek Medlin used to be an executive director at JP Morgan and Chase. Fangwin Sun was an executive director of strategic analytics and risk management at JP Morgan. And all of the rest have 10, 15 years of really good experience. So guys, I really don't like hyping up a stock, but so far, whatever I've seen, I've really liked. So I'm definitely buying into this stock. I do feel like it's a good opportunity, but let me know what you guys think. I want this to be a place where I learn from you guys, and maybe I can provide some value to some of you as well. So this needs to be a two-way communication. So if you think I'm wrong, if I've said anything that's wrong, please point that out, leave a comment, and hopefully together we can make some money. That's it from me, guys. I hope you found some value in this video. If you did, please give it a thumbs up and subscribe to the channel. It really helps with the YouTube algorithm. Have an awesome day, and I'll see you in the next one.